How's it going, YouTube? Today we're going to talk about hedging and Forex. What is hedging and Forex? How can we use it in our favors? And how it is so important for us if we're trading without a stop loss. So my name is Samuel. I've been trading for over 2 years now. And one of the strategies that I use in today's day is operating without a stop loss. So I do trade without stop loss. I do trade with stop loss as well, but mostly what I do now is without a stop loss because I figured it's a little easier over time. And to do that, if you're gonna trade without stop loss, you must have hedging in your account if you don't want to blow up your account. Because again, if you know how trading works and if you understand a little bit of how the system, how the market works, you do know that if you don't use a stop loss, depending on your lot size, your proportional lot size and your leverage of your account, if you buy a currency or something and then the chart goes against you, it could be up or down. Depending on how much it goes against you, you could literally lose all of your capital because you're using the margin of your account to do the trade. So you need to have either a stop loss or hedging. So in this case, hedging. So hedging is a operation of protection. So you're gonna be protecting your margin and your account using hedging. So essentially, say you have your USD. So you have your USD, you have one lot size in your USD on a certain part of the market, and then you choose to buy, and then the chart goes against you, so the chart goes down, and then it goes down to like 60% of your account. So if you have $1,000 and then you buy your USD with a specific lot size, and then the chart goes against you to 50% of your account. So now you have $500 on drawdown, and then off of your $1,000 account. So if you don't do anything right now, you can either wait for the chart to go back up, but one thing, you don't know when that's gonna happen, and you don't know if that's gonna happen, because you don't know if the chart's gonna continue going down or if it's gonna go up, because you cannot control the market. You can't really predict. You can see the future, right? Unless you do, man. But I mean, most of us can really see the future. So depending on how much of a drawdown you have, you need to use hedging. So if it's going down to 50%, it could go down to 60%, 70%, 80%. And if you don't hit a limit, a breaking point, you're gonna blow up your account. So using a stop loss in this case would mean that you actually lost the profit. You actually lost your capital. So if you have 80% of drawdown and you have stop loss, then you actually lost 80% of your capital. But because we don't want to do this when we do hedging, we're gonna protect it and we're gonna be in a channel. We call it channel. So you're gonna be stuck in this channel. So it doesn't matter if the chart goes down or up, right? You need to counter the operation. So what you're gonna do is, say you have a one lot size buy in USD, and then you have 60% of drawdown in your USD, and then you have to sell one lot size. So then you're stuck in the margin. So the same proportional lot, the same lot size you have when you bought, you have to sell. So then you don't actually earn any profits or losses depending on the chart, depending on what the chart does. So essentially, if the chart goes down, the market goes down, because you have profit from this second operation or the second trade right here, it's gonna make up for the loss that you're having here. So that's why you're gonna be stuck in this hedging position. And if the chart goes up, you're gonna have loss at the second trade, but the first one's making up for that. So again, you're gonna be stuck in here. So no matter what the chart does, no matter what the market does, you can stay here, you can stay here. You're gonna be in this position for the rest of your life. And there's a good thing and there's a bad thing. So the good side is, the pro side is, you have more time to think, and then you can find a strategy to go out of your hedging, because you don't want to stay stuck there forever. And the con is, the bad side is, again, you are stuck in this position. So you're not making money, but you're also not losing money, but you're also not making money. So you're stuck in there, and there's the cost of opportunity. So depending on how long you stay stuck in there, you could be really losing trades. So you could be stuck in a hedging position for a month, for 2 months, for 3 months, for 6 months, for a year, for 10 years. Worst case scenario, 10 years, 20 years, or even your whole life. So literally, I know it sounds scary, but I need to be really upfront with you guys. hedging is good, but has its cons and pros. There's no strategy in the market that's 100% guaranteed win rate. There's nothing like this. And if there's anybody in the market, in YouTube or anywhere in the world, that's promising you that, oh, I have a strategy that is 100% win rate, you're never gonna lose, it's bullshit. It's bullshit. It does not exist. Like, Forex itself is risk. Forex itself, it's the highest risk investment in the world, along with crypto and all these other things. But Forex in itself is really high risk. There's nothing like this. Every strategy has a pro and a con. Every strategy. Every single strategy. There's nothing in this world that's guaranteed. Nothing. I can guarantee you results. Nobody can guarantee you results because you don't know what the market's doing unless you're a big shark. You know, unless you're a big company, unless you're a big bank, you have trillions of dollars to operate, and then you actually move the market. But if you're not really moving the market, then I'm sorry, you can guarantee nothing. So that's why we use hedging, you know. And again, the good side about hedging is you have time to think and you can get out of it, and the bad side is the con is you could stay there in this position forever. So we need to find ways to go around it, and there are a couple of ways in which I'm going to show you later on the channel. But basically that's how you're going to be trading. So not necessarily the hedging is a bad thing. I'm just telling you the worst case scenario just so you understand what you're putting your foot into, right? You understand where you're getting involved into, because that's the risk of operating without a stop loss. So again, if you do use stop loss, the good thing is that you're going to be protected, quote unquote. But what happens is most people, they're going to lose money over time. So they lose bit by bit every day, every week. And again, the account goes down and drops and drops and drops and drops and drops. And then day by day, you lose money. And over time, you can blow up your accounts because you're losing more than what you're making. That's what happens with 90% of people. That's why you have this false sensation, this false feeling of, oh, I'm safe. But if you're losing a little bit every day, on the long term you're losing anyway, versus not using stop loss, which yes, you have a drawdown, but it's easier for you to go up versus not going up. So I don't know why I started talking about it, but I just want to make sure that you understood what we're doing in here, because I want to explain exactly how I work. But that's hedging, okay? Hedging is protection. Hedging is protection. Hedging is a tool for you to gain time and protect your account from blowing. So you need to figure out, how are you going to do this? How are you going to split the risk, and how you're going to work with it? You need to understand that you could be stuck in a hedging position for a really long time, and that's the downside of it. So we need to find ways around it, so we can close the operation without losing time, without losing money. And that's pretty much how it is. And again, you can use hedging in a lot of other markets as well. You can use hedging in stock market. You can use hedging in other markets as well. But we're talking about Forex specifically in this video, because for every market, hedging is different. So there are different types of market and different types of hedging in every market. So on Forex, that's what we're gonna do, right? There are a million ways to do hedging. There are a lot of ways to get out of it, and we need to understand how we're gonna do it, right? So thanks for watching the video. If you like it, please subscribe and stick around. We're gonna be talking about Forex, and we're gonna start making money with this YouTube. I'm gonna help you how to make money with this YouTube, right? With the strategies, with the YouTube videos, I'm sorry. And then, I don't know, hopefully I can help you in some way, shape, or form. So yeah, I'll see you guys later. Have a good day. Bye.